Hi everyone, I'm Madhilagan Sambat, studying Master of Science in Data Analytics at National College of Ireland. This video is regarding data warehouse and business intelligence project on analytics of insurance market in USA. Now let's go through the data source of my project. My first data source is of Statistica, which gives me the health insurance direct premium return for the year of 2017 and the employment rate of USA. And the second data source be.gov, which gives me the value added by industry to USA GDP. And next data source OECD data, which gives me the USA GDP. And the next data source is finance.yahoo.com, which gives the stock market close price of different insurance companies for the historical period. And data can be downloaded from daily, weekly and monthly basis. I had chosen monthly and downloaded the data. And next data source is Dwbi website, which gives me the direct premium return market share of different insurance companies for different LOBs. And there are 9 different LOBs for this project, so 9 different URL need to be accessed, and the data is fetched using REST package in R and stored in a CSV file. And my next data source is Twitter, which is my unstructured data source. Let's go to SSIS. Here the data extraction process is automated. Just click on the start button. The R extraction will be running. So the R process getting triggered. Let's go to the R code of my project. This is a R code to extract data from the different URLs. So 9 different line of business, so 9 URLs has been passed. So the data has been fetched and stored in a data frame and saved in a CSV file. Then later the CSV file is used to remove the unwanted special characters present in the columns and then stored in a CSV file. Then the stock market close rate download from the finance.yahoo.com consists of so many unwanted data and special characters, so those are removed. And then the data given in the finance.yahoo.com is for monthly, so we need to aggregate the data for years. So using the SQL function, we are grouping the data by company and year and using select statement to fetch the company name, year and average close rate feeds and stored in a CSV file. And we are cleaning the data and running the sentimental score. This is a sentimental score part for my project and stored in a CSV file. Let's go to the SSIS again to see the completion of the automation. Now the data is completely automated and data is stored in a CSV file or moved to the staging area, and everything has been processed successfully and cube is deployed automatically. So every process in this SS is automated and now cube is deployed. Now let's go to SSAS, where star schema can be viewed. We had used Kimball's bottom-up approach. Now let's go to Tableau, where the connection between the cube and our Tableau has been established and dimension and facts has been populated. And now my first BA query is to determine premium return of a company is also a factor to determine the close rate. Based on this graph, we can see that premium return is also a factor to influence the stock market close price. My second BA query is to find the relationship between the sentimental score of Twitter to the stock market close price of insurance companies. From this graph, it is evident that the stock market close price is low and the score of Twitter is also low, and the stock market close price is high and the Twitter score is also high. My next BA query is to determine the factors between the insurance revenue and the employment rate. After the financial crisis of 2008, the US economy had faced a very drastic change, and here from graph you can see that the GDP and employment rate are drastically getting reduced after 2008, and the stability of economy is getting gradually increased and the employment is also getting increased, so that the insurance revenue after financial crisis also getting increased, and the contribution of insurance industry to country's economic GDP is also getting increased. So here I conclude that insurance industry plays a major role in US's GDP. Thank you.